Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello, good evening to all the viewers and friends of CSC Pre-Market. Today is November 7th. It's Friday and the weekend is just around the corner. As usual, we're here to bring you discussions on two topics. The first topic is heavy rain and dense fog. Is it really darkest before dawn? As we know, yesterday the US stock market experienced a brief correction, so we'll explore this further to see if there's any information that can help clarify things, or at least provide some useful references. We're also very happy to welcome our online viewer, Alex Fool. Hello, Alex, and hello to all our viewers and friends online. The second topic is about the balancing act between politics, the economy, and the stock market. Right now, investors might feel like, wow, the market goes up one day and down the next, and sometimes after a rise, there's a pullback. So what should we do in this situation? Or is it really just like walking on a balance beam? You need to keep your balance on both sides, which is like balancing between buying and selling. Similarly, when it comes to politics and the economy, can we also see the same kind of phenomenon? Alright, today we'll continue to help everyone understand this. First, let's take a look at Thursday, when the US stock market fell. The main reason was that large tech stocks dragged it down. Investors are now scrutinizing whether these tech giants' upcoming massive capital expenditures can actually bring them future revenue prospects, or if they can deliver returns. Profit growth that allows them to maintain this kind of high-speed growth momentum they've had in the past. After all, they've been growth stocks. So, what about the S&P? At the New York close, it fell by 1.1%, while the equal-weighted index dropped by 0.7%. Here, the Magnificent 7 index dropped about 2%. We'll look at that soon. Meta fell 2.67%, weighing more on the Magnificent 7 index. Nvidia also dropped, down 3.65%. It's mentioned here that earnings season is already coming to an end. Let's discuss this a bit. Now that earnings season is winding down, the next of the Magnificent 7 to report will be Nvidia on November 19th. The other major tech giants have already released their reports. This has indeed provided some support, or even a boost to their individual stock prices or to the overall market trend. So next, everyone will be focusing on Nvidia's earnings report, right? And just like before, if there are any positive surprises, even small or unexpected ones, or if the company gives a much clearer and more optimistic outlook for the future than previously anticipated, could this perhaps, in some way, become a source of hope for the stock market as a whole? And we'll need to keep monitoring things as they develop. On the other hand, if we look at it from another perspective, if we think about it the other way around, have the positive factors revealed in the financial reports already pushed the stock market's momentum ahead of schedule? So, if there's a period coming up where there aren't any major positive catalysts, a sort of vacuum of good news, no one really knows what the next big, exciting driver will be. Earlier, before the market opened, I also saw a piece of news. Tesla's shareholders, with over 75% support, approved the compensation package for Elon Musk that we mentioned before. In other words, they cast a vote of confidence, allowing a business leader like Musk to continue leading Tesla, and with these extremely ambitious goals and a highly rewarding compensation package, enabling Tesla to not only remain an electric vehicle company but also to transform into something more. A company involved in AI or humanoid robots. With such a vision for the future, he wants to continue unlocking Tesla's potential for everyone. But can he really achieve this? We'll have to keep watching to find out. Alright, as mentioned here. And also, why do we say that fog is like heavy rain? Of course, a storm is easy to understand. It's also mentioned that if a driver encounters poor visibility while driving, when you can barely see ahead, shouldn't we be extra cautious and slow down? You have to look both ways, pay even more attention to traffic lights, and watch out for things like cats or dogs by the roadside, or whether there are any pedestrians. Motorcycles, bicycles, all kinds of vehicles like scooters and bikes. There are more unexpected situations with these. That's why the government, for this very reason, as Chairman Powell mentioned before, refers to this fog he talks about. This is what he means now. You can't rely solely on all the official statistics related to inflation and employment. because that's just one thing they can depend on. The next step in making decisions is crucial, so they believe that in this fog, it's even more important to rely on data from private organizations, that is, data from the private sector. Now, let's take a look at the Magnificent Seven. The index dropped by 2.02% yesterday. This is also because it represents some of the main aspects of the market, such as large-cap stocks. This kind of trend, or movement, is actually a very important factor affecting investor confidence. Whether it's about emotions, be it greed or fear, this serves as a key indicator. Also, as we mentioned yesterday, there are actually two types of anxiety, right? One is the fear of prices dropping, and the other is the fear of missing out, FOMO, the fear of missing out. So usually, if we're talking about the situation where people are afraid of prices dropping, what does that mean? This fear, when we're really scared, we keep chasing, just hoping to catch up with the price increase. In that case, our first fear, the fear of prices dropping, actually gets even stronger, because we keep chasing, increasing our positions, and adding more protection. Of course, it's also possible that if the price keeps going up, our profits will increase too. But at the same time, we'll get more and more afraid of a drop. The first fear just gets amplified. On the other hand, if we're really scared of a drop, right? If the price changes and drops, we hardly enter the market, or maybe we don't dare to buy, or we just buy a little. If that's the case, then what? Then the second fear might get amplified, because what could happen? Well, when you see investors around you, or the media, some people start talking about how much they've made, how much certain funds have earned, or how much certain assets have gained. At this point, the second fear gets amplified. So, it's a relative concept. Usually, you shouldn't get too obsessed or fixated on just one side of it. You need to keep both sides in check, just like balancing on a beam. You have to control both ends well to be able to smoothly move forward toward the future of the stock market, both near-term and long-term. Now, let's take a look at Meta. Its stock performance has been relatively weak recently, with a drop of 2.67% yesterday. So, what's the reason for that? Let's see if it's a case of misfortune piling on. So, what did Meta point out here? Its high capital expenditures have reminded some investors of a few years ago, when large-scale spending on the metaverse also impacted its stock price. You might remember, they introduced a really big, head-mounted display, one of those headsets that covers your entire eyes, so you feel completely immersed. That was part of their vision and ambitions for the metaverse. Honestly, it's very creative, and he also hopes to do some really innovative things in there. Whether it's projects or ideas, they're all pretty good. But at that time, Amita really had to bear the related issues, whether it was market uncertainty or doubts about her. However, her recent key financial reports have come out, and some of the numbers are actually pretty good. But they did say that capital expenditure this year will reach $72 billion, and next year it will increase significantly again. Last time, their CEO Zuckerberg was also very confident about the metaverse, right? This time, he's still very confident. He said that he downplayed concerns about overspending. He said that actively moving forward to build certain capabilities, he was referring to AI or computing-related things, is the right strategy. And today, I also saw some reports about him like this on Bloomberg and the Financial Times. In the article, it actually says that Zuckerberg might be focusing on building AI algorithms or the foundational infrastructure for AI computing. He believes that if you want to seize the top spot in the future AI field, he thinks this might be a once-in-a-lifetime opportunity, and once-in-a-lifetime means that if you miss it, it won't come again. So that's why there's been a massive reallocation of funds and resources. Of course, Zuckerberg is extremely proactive, and we also respect him as a very promising business leader. As for whether his outlook and this kind of optimism will actually come to fruition, that's something we'll need to keep watching in the future, because right now, as for Wall Street, the market is currently somewhat skeptical and has some doubts about him. Alright, let's take a look at the second situation. Why did we just say, when it rains, it pours? There's this judge's ruling regarding Meta, whether it's about several social platforms or media companies. The judge said that these companies, for example, Meta, ByteDance, TikTok, TikTok's parent company, you know. And then there's TikTok, or companies like Alphabet, Google, or Snapchat. What are they being accused of? Some parents or victims, specifically teenagers, are accusing them saying that because of these social platforms, it's very easy to get addicted, so it has caused some negative effects on their physical and mental health, leading to bad situations and experiences. So, the judge ruled that these companies must stand trial. This clears the way for thousands of future cases. This is the first type of case like this, and the judge has rejected the company's last chance to avoid trial. So next, they may have to face accusations from users and related parties. Alright, this allows other claims to proceed. Actually, this wave of lawsuits started 3 years ago, and the focus was directed at, for example, their widely used platforms by users around the world, such as Facebook or Instagram. These kinds of media, social platforms like this, TikTok is one of them. It's popular worldwide, unlike the international version, or in their own country they might use Douyin. What do you think? Media like this, or YouTubers, are commonly used to watch related videos, shows, and so on. Snapchat was mentioned a few days ago. It's actually also a social media platform. Okay, so next January, there will be testimony in court regarding these 3 cases, where people will testify that they became addicted to these online platforms and what kind of suffering they experienced as a result. As we just mentioned, not everyone is affected in the same way. These teenagers, for example, may not be fully developed or mature yet, whether in terms of mental development or overall maturity. So sometimes, when they come across certain videos or see this kind of behavior among their peers, no matter what kind of behavior they engage in, they might start to feel anxious, or they might continually feel like they're not getting a sense of acceptance among their peers. All of these are possible. So that's what they're talking about here. The lawyers for these social media companies say that these plaintiffs can't provide enough evidence to prove that it's the platform's design, like content curation algorithms. For example, since all of these involve algorithms, that's responsible. Endless scrolling, whether it's swiping or scrolling, always wanting to see new content, or personalized notifications targeted at different users, like what kind of notifications or ads are sent, all of these could potentially lead to the harm alleged in the lawsuit. That harm refers to physical and mental discomfort, or various other reasons. Alright, so the spokesperson for Meta actually stated in their statement that they strongly oppose these allegations, because we shouldn't just listen to one side. We haven't seen how Meta responds, but they say they have evidence proving that they have long supported these teenage groups. In other words, they hope not to negatively affect their normal physical and mental development. For more than 10 years, they have listened to the voices and opinions of parents, and have worked together with experts and law enforcement agencies, hoping to manage this kind of issue and understand the most important problems. Alright, let's take a look. We're focusing on Meta's profits here, so we've listed its recent year's profits as well as the projected profits for 2026, along with the growth rates. First, we can see that for this year, the orange bars represent the figures that have already been reported and are relatively clear. The gray or off-white bars represent estimates, which are the projected numbers from the Wall Street market, as seen on Bloomberg. These figures could still change in the future, so everyone should keep an eye on them. For example, if we look at 2026, we can see this as well. For 2025, things actually look pretty good. As for 2026, by the third quarter, there still seems to be overall room for growth. But for the whole year, is the growth really going to be that strong? For example, if we look at this as a reference, is it really going to be as high as 25%? And when it comes to this growth rate, is it really going to be like that? For instance, because of this, the base is relatively low, right? Just 1.05%. So when it jumps to 7.45, does that count as a pretty significant accounting variable? That's something we can keep watching. And even looking ahead to 2027, will the growth potential be discounted by the market? That's something everyone should pay attention to as well. When it comes to growth potential, it may not be as before. In the past, there were times things looked good. For example, over the past 20 years, there's been improvement. So in 2026 and 2027, in the next 2 years, will there be something that can? For example, regarding what we just mentioned about them making heavy investments, we need to keep an eye on whether these can be monetized and whether they can help generate higher profits for the company. This is something we need to keep monitoring. Okay, another thing we noticed, as mentioned in the English report, is that Nvidia's stock price dropped by 3.65% yesterday. So let's also take a look at, for instance, what Jensen Huang has to say about this. When he was interviewed, he talked about the AI competition between China and the US. Who will win or lose, or rather, who will have the upper hand in different areas? Let us explain this part, which was mentioned in the report. We've put together some basic statistics for everyone. Let's take a look at this chart. On the left is the US, and on the right is China, right? Now, first of all, it breaks things down into 4 different categories for comparison. The first one is what it considers to be. The United States still controls the majority of the world's large CPU clusters, about 75% of the total cluster performance. This is the main reason why it remains in the lead when it comes to AI. But secondly, when it comes to internet users, for example, the US has about 321 million, while China has around 1.1 billion. However, I want to specifically point out that this number can be a bit misleading if you just look at the data. Why is that? Because the US does have a smaller population than China, but when it comes to applications and technological or AI development, the whole world pays attention to and uses what comes out of the US. If you add in, for example, other regions with large populations, let's say India or the European Union, then the total number of users easily goes up by over 1 billion. And then there's also Japan, South Korea, and even, for example, other regions in Asia, right? So if you add all that up, it's really hard to say who's going to win or lose. It's not clear, because these technologies are aimed at the whole world, and the whole world is watching the US. Okay, so what about Chinese? Having 1 billion people is definitely an advantage, but if you add in non-Chinese regions, then it's hard to say. So there's a question mark here. It's not necessarily a win for China, because of that. The AI developed in the United States is usually aimed at the whole world. So, what's the third factor? It's electricity, which was mentioned yesterday by Sun, the Chinese business leader. He brought up whether the competition between China and the US might come down to the cost of energy or the availability of energy. There could be a gap in terms of supply, so here we can see the units related to electricity generation. These are the relevant units, like terawatt hours. And indeed, there is currently a bit of a difference between the US and China. If we look at the current data, there is a slight gap. So for now, China is temporarily categorized as being in a more leading position, meaning they have no issues with electricity supply. Now, in the US, even though there are things like the power grid and whether the electricity behind AI-related computing power can strongly support it, so that AI can keep expanding its boundaries and electricity generation can keep up with that expansion. That's why there's a wave of nuclear energy revival happening in the US. The hope is to make progress in power generation. Yesterday, we also mentioned whether the utility power index in the area of power generation can support AI. In addition, of course, there's the aspect of talent. Here, it talks about the main AI talent, and it mentions the proportion of AI researchers from different countries among the authors of NeurIPS papers. In other words, this might be a relatively important set of data from academic papers, and the United States is still in the lead. So, even if things are a bit uncertain for now, we can at least see that the US is ahead in about 3 areas. Now, looking at the text, of course, the semiconductor factories in the West, for example, TSMC and Hsinchu, are also able to keep up because they continue to work with major US clients in advanced manufacturing. But when it comes to serving major clients, like Apple's iPhone, for example, they are still leading in process technology by at least 2 or 3 generations. Whether it's 2 nanometer, 3 nanometer, or 5 nanometer technology, they're ahead. Next, let's take a look. Is this the only factor at play? Here, we've also listed some of the major events for NVIDIA so far this year. This is the latest situation. NVIDIA, the company in question, is currently not in talks with Chinese companies to sell the Blackwell AI chips. Also, this chart here is from the beginning of the year, after deep-sea shock shook up the entire market during the Lunar New Year period. After the tariff date, right? The stock started to decline. Then, the US took a strong stance, wanting to maintain this bottleneck or restriction on China's AI development. Later, when NVIDIA's market cap reached $4 trillion, this chart highlighted some of the key points as NVIDIA aimed for the $5 trillion club. There were also reports from the US suggesting that these controls might be relaxed. After that, SoftBank increased its holdings. NVIDIA shares. And even next, there was talk about investing in companies like Intel, who are taking actions related to OpenAI. So, of course, the next big trigger was the GTC conference. NVIDIA has set a very ambitious target of $500 billion. In the future, it needs to achieve this kind of revenue goal, which is why its market value has reached $5 trillion, making NVIDIA look good. But actually, in this situation, we need to pay a bit of attention. What NVIDIA is actually doing? Why did Jensen Huang say this in the media? What is he really worried about? As for China, it might also have nearly half of the world's developers. No matter what kind of city platforms or AI-related functions they're developing, NVIDIA really hopes that these Chinese developers will use NVIDIA's ecosystem, like CUDA, for example. Alright, so if these people are able to use it, then of course NVIDIA's future business would be endless, right? But as we've also mentioned professionally, China is now facing the issue of chip self-sufficiency. They want to have their own production and their own R&D, and they have the determination and roadmap to do so. So yesterday, for example, regarding government-subsidized data centers, they announced that within the construction schedule where foreign chips account for less than 30%, they hope to replace all of them with chips produced locally in China. Alright, so let's point this out here. This is something to keep an eye on. So, as for Cambricon, there was recent news pointing out that when they were developing their products, they mentioned some related software or ecosystems. What they're trying to do is, in a way, imitate the concept of an ecosystem like NVIDIA's CUDA, not just using their own chips, but also focusing on what's inside. They have a lot of related software that allows them to integrate with many different CPUs, enabling parallel computing. This also makes it widely accessible for developers to try out. And once they start using it, they might find it hard to leave, because if they want to switch to another ecosystem, the migration cost is extremely high. It's just not worth it, and they probably couldn't stand it either. So it will continue to have an advantage in this area, and of course, that will keep benefiting it. Now, as we can see here, yesterday it closed down by 1.91%, so it dropped. Alright, let's take another look. As for the S&P 500, it dropped by 1.12%. So actually, regarding the market trend, people are wondering if we're really in the middle of a storm, or maybe, like the Fed chair said, lost in the fog. Is it that everyone is seeing the market go up one day and down the next? Just the day before it was up, and now it's down again. Alright, now let's look at today's second topic. Balancing politics, the economy, and the stock market. Let's take a look. The US government shutdown is now the longest ever, moving from 35 to 36, and now 37 days. It's disrupted the airline industry, so airlines across the United States have started canceling flights scheduled for the coming days, and of course, this has affected passengers. The 4 major airlines have canceled more than 700 flights on Friday alone. So, in this situation, as we mentioned, Trump has already started putting pressure on Republican lawmakers. But is this pressure actually effective? Well, that's still a question mark, because first of all, we have to remember that next year's midterm elections are for congressional seats, right? So it's still uncertain who among the Republican and Democratic candidates will win. It depends on how they campaign. But Trump himself is not a main player in the midterm elections. In other words, his name won't be on the ballot. Of course, his name won't be there, because it's an election for members of Congress, not for the president. So, the pressure on Trump himself might not be as great as it is for these congressional candidates, because they have to worry about their terms. If they're voted out, they can't continue working as legislators. Their influence in office or their personal political capital could decline, which would have an impact. It's the Republican lawmakers who are more anxious, because in the most recent elections, the Democrats have won. So, after that, Democratic lawmakers, relatively speaking, might feel that in various regions, or at least in some areas, the political climate is in their favor. So, of course, they don't feel the need to make concessions to the Republicans or to Trump. So they keep voting down the proposal to reopen the government for the 14th time. As for Trump, he'll definitely say things like, "This situation is terrible. We absolutely have to reopen. We have to reopen as soon as possible." Right. He has to make it look like he really cares about this issue. Especially when it comes to things like food stamps or anything that affects people's livelihoods. Of course he has to show that he cares about the American people. But if we actually break down some of his statements in detail, he even once said, after the election, he mentioned this. Take last year's presidential election, for example. He won, right? He sees himself as the victor. He got the power. So, when we observe him, especially in the context of US-China negotiations, we can see that the US does have some weaknesses, like rare earth elements, which China has a bit of control over. This has helped push the negotiations forward and led to the agreement. But does Trump see the Democrats as his equals? That's something we need to question. Because Trump is still touting his victory in last year's presidential election. So, will he actually pay attention to the opinions put forward by these Democratic lawmakers? Or will he just stick to his guns and insist on reopening the government before any negotiations? This is something that needs to be continuously monitored and followed up on. This is also a balancing act that Trump has to face. Why is that? Because on his left, he's worried. The backlash from the public in the future could affect his administration's policies over the next 1 or 2 years, or even 3 years. If, for example, the Republican Party really loses the election next year, and their seats in Congress decrease. Oh, that would be unfavorable for his upcoming legislation. On the other hand, he really doesn't want to compromise with the Democrats, because he feels that if he does, he'll be handing over the bargaining power and leadership to them in future negotiations. He really dislikes that, since after all, he has a strongman image to maintain. Alright, let's continue watching. This was actually shown a couple of days ago. Now, why am I showing this chart again? Let me explain it to everyone first. This is not the Dow Jones Index from yesterday. This chart is from 2018 to 2019, during the last government shutdown, comparing the Dow Jones Index 1 month before and after the shutdown. So, it's just for reference. History doesn't always repeat itself exactly. And now, since it's already been 37 days, no one knows if it will go on to 40 days, 45 days, or when it will actually end. No one knows when the two parties will reconcile and the government will reopen, so it's all pretty uncertain right now. It's still not over yet. The shutdown is still ongoing, and it's even gotten worse. So now, it's like everyone is facing growing uncertainty. The fog of uncertainty is getting thicker. How long will the shutdown last? And is the impact on the economy really as serious as people say? Is it really as big as some economists have estimated? Next, let's take a look at another example. This shutdown has already led to staff shortages. What does that refer to? Of course, it's staff in various sectors, but one of the most important is air traffic control personnel. Air traffic management, because in the US, you need air traffic controllers in different regions to manage the airspace. So, to ensure flight safety, next they will require. Airlines have reduced capacity at 40 major US airports, cutting about 10% of their flight operations. This is so the overall pressure on the aviation system won't be as great. In other words, this way, staff won't be overworked or lose focus, which could otherwise lead to problems. If there are issues during work or with related air traffic control, some trouble could arise. Alright, let's take a look at the next point. So let's take a look at US airline stocks. Of course, as we just mentioned, there are thousands of airlines in the US, but here we've listed 3. Southwest Airlines, United Airlines, and Delta Airlines, along with their respective performances from yesterday. Of course, we'll look at each one individually here. So, United Airlines, that's UA, dropped by 0.96% yesterday. Next, Delta Airlines, which is the L, fell by 1.25%. And actually, let's add one more, American Airlines, which we didn't list earlier. It dropped by 2.01%. But if you look at these 3 charts, you might think, that's strange. Doesn't it seem like American Airlines is actually a bit stronger? Honestly, I'm also a bit puzzled here. The airlines already know about this news, and they might have to cut flights and reduce capacity in the future. So why is that? Why? Actually, it doesn't seem like the stocks have really crashed that badly. When I say the second worst, I mean, is there going to be a really obvious crash like the first one? Of course, maybe the cost of oil, the cost of fuel, wasn't that high to begin with, and at the moment, it doesn't seem to be the case either. Is there a clear trend of it rising in the future? So could fuel costs be one of the factors affecting their profits? Secondly, if they reduce their capacity, could that actually be a positive signal for their ticket prices? Because with fewer flights, sometimes airlines might have to raise ticket prices, or for those with urgent needs, there might be more room to adjust prices. So does this give them more flexibility to operate? Could that be the case? What I'm thinking is, even if they really cut it in half, the impact on their revenue or profits might only be a short-term effect. Because in reality, what everyone still cares about is some investors, or whether it's politicians or commentators, have also mentioned. So, will they really reopen? Some groups express a more optimistic view. For example, the Republican Party. They usually tend to be optimistic. They say things like, "Oh, it's going to happen soon," hinting to the market that the reopening is just around the corner. But in reality, it still hasn't happened yet, right? So, is their optimism blind, or do they actually have a basis for it? We'll take a good look at this over the weekend, and we need to keep paying attention next week as well. Alright, let's also take a look at the foggy lungs we mentioned at the beginning. Because a member of the Federal Reserve Board mentioned that policymakers need to work hard to bring the inflation rate down to the Fed's 2% target. So they won't be focusing their attention on inflation anymore. Of course, he also mentioned making sure that the labor force remains relatively stable. He might be making a comprehensive assessment, like looking at employment data from apps, or news about layoffs and so on. He talked about this and said there's already been significant progress. Yes, significant progress. So isn't that a good thing? Alright, but there's still some work to be done. He said we can't let our guard down completely, because there's still the possibility of inflation getting out of control like it did in 2021. That really did scare them, and maybe there's still some lingering shadow from that. Okay, and in addition, the president of the Federal Reserve Bank of Chicago, Austin Goolsbee, also said that because during the period when the banks were closed, there was no inflation data available. So if they want to continue cutting interest rates, they'll feel even more uneasy, because they don't know whether inflation is currently good or bad, or if it might flare up again. Because they've already cut rates twice, right? They've actually cut rates twice, and especially with the tariffs, the impact on prices, he feels, wow, can they really keep cutting rates? At the next vote, will they be able to continue cutting rates? Everyone feels uneasy, because right now they're walking a tightrope. Alright, and it's not like they're completely blindfolded. It's more like they're wearing a thin veil. It's as if they can see, but also can't, like being in a fog. So that's the situation. Actually, I find the headline of this news story pretty interesting too. Yesterday, this news came out at around 9:58, and after that, the stock market gradually weakened. I was wondering if there was a connection. Basically, after he made this statement, that's what happened. Is he leaning more towards a hawkish stance? Well, maybe, but not necessarily. Let's take a look at the FedWatch tool, which is based on the CME Group's observations. So, the next move, or rather, some traders use this tool to calculate the probability of a rate cut by the Fed around December 10th. They estimate the likelihood and the size of the rate cut. Right now, it looks like there's a chance of a 25 basis point cut, but since there are still more than 30 days to go, it's just a probability for now. Right now, the probability is about 70% that there will be another rate cut. The other 30%, or close to 30%, is that there won't be a rate cut and things will stay as they are. Since there's still quite a bit of time left, any upcoming statements or new data that someone sees will be really important, because that could instantly flip the situation. What's now 70 to 30 could suddenly turn into 40 to 60 or 50-50. Or it could even go higher here, like 80 or 90%. Anything is possible. So it all completely depends on how the market develops going forward. That's why the news is really important right now. Every day, new information comes out, and it all affects the stock market. Any little change in the wind or grass could have an immediate and unpredictable impact. So everyone needs to be even more cautious and pay close attention. Alright, let's take a look here. I've seen some newspapers and magazines mentioning that in the US recently, whether it's because of the government shutdown or, over the past 3 months, issues like tariffs and tax revenue, it's led to their TGA, that is, their general account. The Treasury's cash account, which is held at the Federal Reserve, the TGA balance. This data comes from the Federal Reserve Bank of St. Louis. This information is public, so everyone can look it up. If we look at the orange line, that's when the shutdown started. Of course, even earlier, say in April, May, June, July, and August, they started collecting some taxes, tariffs, and so on. So it started to increase compared to before. Recently, some mainstream newspapers have expressed the view, or reported, that because the government has remained shut down, the expenditures that should have been made couldn't go out, so the funds just kept piling up in the TGA. As a result, the amount has become quite large. For example, let's put it this way. Previously, let's say it might have been a little over $300 billion. Now, the TGA amount has already reached $940 billion. Sorry, about $940 billion. If it was originally a bit over $300 billion, that would have been the level around June or July. After that, it has now become over $900 billion and has just been sitting there. In other words, this will have some impact on market liquidity. Basically, the money is all stuck inside the US Treasury. It can't be released yet to, say, government employees or these private sector entities. You can't release it, because after it's distributed, some people might go invest in stocks, right? That would create some liquidity, some capital that could be put to work, some momentum for funds to move. But that's not the case now. So, is his report actually true? Well, we need to keep watching for further updates, because right now we still don't know. Let's all see. We still don't know if this will keep going up. Since the government shutdown continues, is it possible, as he said, that it will keep rising? Because everything is still stuck at the Treasury Department, it becomes a situation where funds keep coming in, but can't be released, since there's no way to spend them. The government still hasn't reopened, and there's no spending happening. Alright, let's keep watching. Now, let's also take a look at any new developments in US-China trade. Right now, there are some local officials from the US. Let me stress, they're local, not federal, who have gone to China ahead of others. The reason is that certain regions have businesses that frequently export overseas, especially to China, so they're hoping for some business progress. That's why they went to visit China first, hoping to maintain exports to the world's second largest market. But at the same time, we also see this chart here. What does it tell us? Actually, since October 2020, China has started to buy less and less from the US. Honestly, that's pretty normal, because China is an export-oriented country. It's not really a country that likes to buy a lot from the US, right? But still, its purchases have kept decreasing. In fact, we've looked at a similar chart before. What about China's exports to the US? The level of dependence has been gradually decreasing. Now, even when it comes to imports, right? China keeps buying goods, but it's buying less and less from the US. That's why, for example, with soybeans, why did they have to start buying soybeans again? It was so Trump could address domestic issues in the US. Livestock farmers, these farmers, they can make a living, so they hope to revive the old days when the US exported soybeans to China. But whether that can actually happen is uncertain, because China has already started sourcing from Brazil and other countries as substitutes. These soybean-producing regions have already made some purchases. Alright, let's take a look at the mix index. Here, it shows a relatively recent trend. This week is actually the first time I'm showing this historical index. Why is that? Let's observe, from May, June, July up to now, early November, the last time we checked, the current index value is 20, right? 20.13, that's yesterday's figure. Compared to the previous trading day, it went up by 3%. Now it's at 20.13, of course, during the session or when the market opens, it could change again. It fluctuates at any time. But if we take a look at this, previously, in October, China initiated what's called rare earth export controls, and these controls were aimed at the whole world, not just domestically or at the US. At that time, it caused panic in the market, so it directly led to it moved toward 28, but then quickly cooled off again. So, regarding the past 6 months, since we're talking about a half-year period, what was the situation from 20 to 24? About how much did we see? In May and June before that, and then from the end of July to early August, there was a spike, but it gradually fell back again. And then there was October. So actually, after the stock market hit a new high before that. The most recent record high was just a few days ago, right? Then, history quietly started turning bullish. When it turns bullish, it means it's moving upward. So what does this number represent? What is the currency's value? This S&P 500 volatility index is related to the volatility of options. In other words, if it goes up, it means that some funds are continuously looking to buy this kind of instrument as a way to hedge. It could be for hedging, or it could be for speculative trading. Let's put aside which one it is for now, but it does serve that purpose. On the other hand, it also reflects that the market sentiment has recently started to become more panicked and tense, right? Actually, this index went up 3.23% in the previous trading day. I originally thought it might go even higher, maybe even more. Maybe 5 or 6% or more, but it only went up 3.23%, so could it be that things are starting to cool down a bit? It's still hard to say, but everyone can keep an eye on it. If you just search on Google, you can also look up the VIX index. It changes every day, the numbers are always shifting, so you can check it out anytime. Alright, let's take another look here. The US stock market has been on a wild run, soaring more than 30% since the low point in April, completely ignoring all the warning signals. So let's see if there are any other indicators that can help us make a judgment now. Buffett indicators. There have been quite a few of them before. Whether or not the media has mentioned it, what about now? Bloomberg is running this news again, saying we've already broken past the 2022 level, when the bear market was caused by aggressive rate hikes. During the pandemic, a record was set then. So, what is this indicator? The total market value of the US stock market, which we'll see in a chart soon, is about $72 trillion compared to the US gross domestic product, or GDP, by banks. Alright, so even with GDP posting its fastest growth in nearly 2 years, the size of the stock market is still more than double the total economic output. But first, we need to consider something here. Why is that? In the US stock market, it's mainly these large cap stocks that make up a significant proportion. But these big tech companies, as we mentioned at the beginning, are all multinational applications. For example, platforms like Instagram, Facebook, and Google can be used in other places around the world. Amazon is also likely to be included. They're all multinational companies. You can even buy Apple products, right? All of these use NVIDIA's technology in some way. Of course, NVIDIA's most advanced chips might mainly be used in the US, but many of its development tools and other products are actually aimed at the global market, right? So, we need to consider the impact of the Magnificent Seven on GDP and take this situation into account. Now, let's take a look at Barclays' analysis. The strategist mentioned that the current ratio naturally suggests that the stock market is overvalued, similar to before. Some financial experts, big companies, and banking giants have also pointed this out. Now, this indicator does have some limitations, because things have changed. However, it can still serve as a warning signal. Alright, so let's take a look at what kind of indicator Barclays themselves have developed. They said they use options data from 1997 to measure the level of market frenzy. So, what did they say? They looked at the proportion of so-called meme stocks among all the liquid US stocks. In other words, among the US stocks with liquidity, some of them might have stock options, right? So, among them, what is the proportion of meme stocks out of all these US stocks? He said that currently it's about 11%, while the long-term average is around 7%, specifically 7.1%. This indicator previously surpassed the 10% peak during the dot-com bubble in 1999, as well as in 2021, when everyone was speculating on meme stocks like GameStop. Alright, let's take a look at this chart next. Looking at this chart first, we can see that the dark blue line represents the Buffett indicator we just mentioned. So, if we look at the left side, it has indeed already exceeded 2 times, and is now between 2 and 2.5 times, gradually moving toward 2.5 times. Alright, and then, the light blue line is the indicator from Barclays that we just mentioned. As we said earlier, it's around 11%, which has already surpassed the previous peak of 10%. Let's take a quick look at the previous cycle, because after the inflation surge and the aggressive rate hikes that led to the bear market, it was indeed the case, just as he said. At that time, this indicator also broke through the 10% peak. And back then, the Buffett indicator was also more than twice its average. Yeah, and afterwards, that was indeed the case. Also, because of these aggressive rate hikes, tech stocks, like their valuations, were really hit hard. The speed of the rate hikes was extremely fast, which had a big impact on valuations and did cause a pullback like this. But whether this indicator can fully reflect everything, I think we still need to consider it further. Oh, and here's why. This is news from November 5th on our site. There are some, like the local valuation of the Korean stock market, for example, which is considered relatively low. So some strategists say that the buy the dip strategy is still effective. What they're suggesting is to buy the leading companies in these top industries at a low price. He believes this strategy is still viable. As for whether this applies to the US stock market, that's something everyone should pay attention to. Because as we mentioned before, after major moves, and then talking about the stock market, the market sentiment, right? What about the traffic light indicator? If it's roughly at a yellow light status, then everyone will have different considerations based on their own risk tolerance and how they manage their funds. Just a reminder to everyone, since these warning signals have already appeared. There are also these strategies, like buying the dip. Over the past 6 months, haven't we all seen that some people who bought the dip actually achieved pretty good results? Because in the end, the US stock market hit new highs, right? So, when considering these two approaches, everyone can also pay attention to whether you're walking a tightrope here. Oh. Should you buy or should you sell? Should you increase your position or should you reduce it? Of course, if you're being cautious, maybe you could try reducing your position, or perhaps gather more information and take a wait-and-see approach. That might be a good option to consider. So, for today, there probably won't be any non-farm payroll data. In addition, there's the University of Michigan's consumer sentiment and short to mid-term inflation data. Everyone can keep an eye on these news updates. Okay, as for this week's company earnings reports, MP is also one of the major mainstream rare earth companies in the US. Its loss per share was 10 cents, which is actually better than expected. The market was expecting a loss of 17 cents per share. So, although it posted a loss, the loss has actually narrowed. They also mentioned that next year, the company plans to start production at its heavy rare earth separation facility in the midterm, and among the heavy rare earths, there are two that are particularly low and special. So, where can these be applied? For example, in high-performance magnets or magnetic materials. And where are these magnets used? For instance, in motors related to electric vehicles, or as essential components needed for the operation of wind power generation systems. In addition, it can also be used, for example, in high-purity tantalum, which is used in capacitors on chips. That is to say, this high-purity tantalum, let's say with a purity of over about 99.9%. In this case, it can be used to help these chip capacitors with things like, for example, heat dissipation, or related aspects such as improving their heat resistance, since it performs well in that regard. These kinds of elements will be used. Okay, now let's take a look at the ups and downs before the market opens. Because these things are constantly changing around 7 or 8 o'clock. We see that Airbnb is relatively strong in pre-market trading. Also, CRW and Nvidia have a kind of parent subsidiary or investment relationship. On the other hand, 2WV is relatively weak in pre-market trading. Let's look at Airbnb again. We just mentioned it. In pre-market trading, it was up as much as 4.6%, but now it's a bit less, about 4.33%. It's always changing, so keep an eye on it. The company released a better-than-expected outlook for the upcoming holiday season, including Thanksgiving and Christmas. In other words, they've launched a service where you can book first and pay later, hoping to encourage more people to use their platform, right? So, the rate of bookings has clearly increased, meaning more people are making reservations. For a few nights or several nights of accommodation, since it's a sharing economy platform, for example, some people who own houses or real estate can make their space available for rent. Then, travelers can come and stay there. Whether it's for resting or accommodation, here we also look at its price-to-sales ratio, which is the price per share divided by the revenue per share. This ratio is 6.22%. This is one way to evaluate the company. As for the price-to-earnings ratio, it's 28.74. The price-to-earnings ratio is the stock price divided by earnings per share. Earnings per share is calculated by dividing stock price by earnings per share. Remember, these numbers change daily, so keep an eye on them. For example, market cap and price will fluctuate. The closing price a few days ago was 120.53, so continue to monitor these figures. Let's take another look here. This is also the last page, CRWV. According to a Reuters report, Vast Data, which Nvidia has invested in, has signed a commercial agreement worth $1.17 billion with a related cloud service provider. And they're also expanding their partnership, so they're going to use Vast as the main data platform for their cloud infrastructure. That actually sounds pretty good, right? $1.17 billion. So why did their stock drop before the market opened? Yeah, so everyone, make sure to pay attention to the volatility after the market opens. Alright, so today, this week, we've talked about some uncertainties regarding the Federal Reserve, or some warnings. Yeah, some warnings from Wall Street giants, and so on. I hope that everyone can walk steadily and smoothly on this balanced beam ahead. I wish you all good fortune and safety, turning misfortune into blessings. I'm also very glad you tuned in this week. Good night from Kunying, and we'll see you again next week. Bye.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.